What's up everyone, it's Kenji here, and in this video we're going to be creating a dynamic 3-statement model where we'll be linking the balance sheet, the income statement, and the cash flow statement. And you can download the file I'll be working with for free, as I'll leave it in the description below. So let's get into it. And here's the steps we'll take to make this financial model. Firstly, we'll organize and build our income statement using a set of assumptions. Secondly, we'll create schedules to model out more complex line items like capital expenditures and depreciation. Following that, we'll build out our balance sheet. And lastly, we'll build up the cash flow statement and link the 3 statements together. And in case you're wondering when a 3-statement model is useful, on the one hand it's just for regular financial analysis, and on the other hand this is usually the foundation for any sort of valuation work that you might do, like for example a discounted cash flow, an LBO, or an M&A model as well. So if we get into the Excel file, here we've got the income statement. If you go control page down, you can find the balance sheet, the statement of cash flows, and the fixed asset schedule. So firstly, let's start off with the income statement. Press the Alt-W-VG, which is going to get rid of those grid lines, which are sometimes a bit annoying. And this financial model we'll be building is for a lemonade stand company in its early stages, like say a startup. Let's get started with the income statement first. So over here, you'll see that we have the year. Let's move that along to all of the other years as well. So for that, we can do a formula like the E-date, so equals E-date. Press the tab key. The start date is the previous years, comma, and then the number of months ahead. So that's going to be in 12 months time. So put a 12 there. That's going to give you 2023. And we want to move that along all the way to these other years. Once we have that, we want to change the type of date here into something like the year and then the E letter for the estimate in this case. So press the Control-1 key for that. And from there, we're going to go to custom, and we're going to customize the type of date here. So what we're going to do is put the Y 4 times, which is going to stand for the years. Then we'll put this sign over here, which is like a dash. And then followed by that, we'll put a capital E, which is going to be the estimate equivalent. Press enter. That should change everything into this. The reason we just want the year instead of an actual date is because the income statement is usually for a range of period, like one entire year, while on the other hand, the balance sheet is for a snapshot, so a particular day. In this case, it's for a whole year. Let's also start formatting the rest of the income statement. So we'll put some indents over here for the gross revenue and the discounts. Press the shift down arrow to select it. From there, you'll go to Alt H6, which is going to indent them for us. And after that, let's also add some borders here on the net revenue. So press the Control B first to bolden it, and then we'll go to Alt HB. And let's say we want to add some borders just above it. So for that, we would just press the P key, like so. Same thing over here. So for the cogs, we would have to indent all of the cogs here. So Alt H6, put a bold sign over here for the total cogs, so Control B, and same thing, Alt HBP. And you get the general idea. So I'm just going to fast forward this whole process so you don't have to keep looking at it. Once we have things formatted the way we like them in the income statement, we can go to the very bottom by just pressing the Control and the down arrow. And over here, you'll find a different set of assumptions. So these are all the assumptions that we've made about the lemonade stand and how we think it's going to perform. So for example, for the revenue, it would be the cup sold over here, the average price of the cup, and any discounts that we might have. Then we have the different raw materials, like what might be buying the actual lemons, the ice, and things like that, as well as other operating expenses. So these are things like the salaries that we might have, any office or rent space that we might incur. And then lastly, we have the tax rate, which, well, is just inevitable, right? And you'll probably notice that all of these assumptions are in blue. That's generally the convention. You'll have them in this color when they're hard-coded, meaning that they're not an actual formula, and you just type the number in yourself. Let's also format this area a bit more just by putting a few indents. So Control Shift down arrow to select all of that, then Alt H6. Same thing over here, Control Shift down arrow, Alt H6, and same thing over here, Alt H6. For some of these assumptions here, you'll notice that they're actually as a percentage of revenue, like the discounts here, raw materials, etc. So for that, we're actually going to change it so it's dynamic and it looks like it. So we'll go to equals and then Control up all the way till we reach B6 here. Press the ampersand, and then we'll put a quotation first. Quotation here, put a space, and as a percentage sign of revenue, of rev should be fine. And then we'll go close the quotations, and just like so, and then press enter. And now you can see we actually forgot to put the space here in between the discount and as a percentage of rev. So I press the F2 key to get back inside the formula. And let me just add a space over here. Generally, when you put an ampersand and any quotations, you can put whatever you want within that sentence. So in this case, we made it like this. So now that we have that, we can actually just drag it down. So we'll go Control C and drag it all the way to these here. So we've got raw materials, fulfillment, and now because it's all dynamic, it should be linked to the right one. Same thing down over here. we'll press the shift down arrow and then control V. You'll notice now this one's not quite right. It's not gross profit that should be in here. So we'll press the F2 key just to see what's going on. And you can see that we actually have to drag them a bit lower down till the labor here. Press enter and then control C again and control V. And now it's looking the way it should. Now that the assumptions are looking good, let's actually fill in the income statement. So go control up all the way to the top. And then for the gross revenue first, that's just going to be the price times the quantity. So we'll go equals, go all the way to the assumptions. That's a cup sold times the average price per cup. Press enter. After that, the discounts, they're going to be negative as we're essentially giving away money in a way, right? So for that, we'll go to equals. As we said, it's a percentage of revenue. So we'll select the gross revenue and then multiply it by minus the 5%. So let's go ahead and select that, press enter. And then for net revenue, we just can sum these two. So you can go, the shortcut for that is just the alt equals. That's going to automatically fill that and give you the formula, press enter. Moving on to the raw materials, and here we're going to go equals and select the gross revenue because it's a percentage of revenue again. And now this time around, we want to press the F4 key and then press the F4 key again till you only have this dollar sign on the 5. If you don't know, these dollar signs essentially fix a cell. So if you move a formula along, that cell is going to remain fixed. So that's what we want for this one, and then multiply it by the raw materials percentage, which in this case is that 30%, press enter. And this way, we actually want to make it negative because it's going to be a cost, right? So press the F2 key, and at the very front of the equal sign, press the negative sign, press enter. And then we'll just drag this down a bit, so control C, and then just paste it down over here like so. And then for the total COGS, again, same thing, so alt equals, press enter. I just noticed here that the formatting should be a bit different actually. So this one here, the total COGS, should actually have that format for the gross profit. So for that, we'll select this over here, press the Alt H FP, and then just the down arrow. That's going to give you the same format for the one below. And then this one here, we don't want this format. We actually want our normal format, like the transaction fees here. So we'll select that by shift right arrow and then Alt H FP, and then press the down arrow. And now that's looking better. Next up for the gross profit here, we're actually going to be equals, and that's going to be the net revenue plus the total COGS here. And you might be like, well, isn't the cost a negative? And it is, but because it's already a negative over here, if we do a negative minus another negative, it's going to be positive for us. So instead we just sum both of them, and that should be working. For the gross profit margin just below, we want to go equals, and that's going to be the gross profit divided by the net revenue over here. Press enter. Now moving on to the operating expenses, and the first one we've got is the labor here. And again, we want to make it negative as it's going to be a cost for us. So equals negative sign, control up all the way to the gross revenue here. And we want to lock this one again. So press the F4 key again. So it's just on the number over here. And then multiply that by the percentage of labor. So control down arrow, sorry. And let's select this one here, labor as a percentage of revenue. And same thing, we want to control C and just paste it down, control V over here. Total OPEX is going to be alt equal sign, press enter. And then for the EBITDA, we'll go equals. That's going to be the gross profit plus the total OPEX. And in case you don't know what EBITDA stands for, it's the earnings before the interest, the tax, the depreciation, and amortization. You're probably wondering what that means or why it's useful. And it's generally a measure of profitability. And the reason why you want something like this is to be able to compare with other companies better. For example, this is a bit of an extreme example, but let's say that one company pays $0 in tax and the other one actually has a 30% tax rate, so you pay a ton in tax. Now those two aren't very easily comparable if you're comparing the net income of one versus the net income of the other. Just because if that one's paying 30% tax rates, then that net income figure is obviously going to suffer. That's why you actually omit the tax rates and you go to something like EBITDA so you can compare them more fairly. Next up here, we've got depreciation amortization, and for now we'll omit this, we'll get back to it later on. For the EBIT, let's go ahead and set up the formula right now. So we'll go to equal sum, press the tab key, and just select the two from here. For the interest expense, we'll also omit that for now and get back to it later. But let's set up the formula already. So we'll go equal sum, press the tab key, and select these two over here. For the taxes, we do know them. They're the 21% assumption that we have below. So let's go ahead and do that. So equals, get the EBT times the tax rate. So control down arrow all the way to the bottom here, the 21%, press enter. But it should be a negative, right, for the tax. So we'll go F2 key and put a negative sign up front. So press the F2 again, sorry. And just put a negative here, press enter. For net income, it's just going to be the sum of that. So equal sum, tab key, and select these two here. Lastly, we have the net income as a percentage of revenue. So this is just another ratio that we have. So we'll go equals net income divided by the revenue. So that's going to be the net revenue over here. So now that we filled all the items for the income statement, we should be able to drag them along. So first press the Control up to go all the way to the top, then the Shift down arrow, and just select everything till the bottom here, and then Control C, and then Shift right all the way to the end, and Control V. That should automatically populate for us. And before we move on, if you like what you're seeing, we do have an Excel for Business and Finance course, which I created with my friend Michael, who helped me with this, and he's a financial analyst at Tesla. In the course, we teach everything we know about Excel, specifically for people either looking to break into the industry or those in it trying to level up their Excel skills. Unlike most other theory-based courses, we tried to make this one as practical as possible based on our real experiences working at companies like Tesla, Amazon, or Goldman Sachs. So aside from the typical lessons on formatting, formulas, and charts, we have case studies that replicate the type of work you might be assigned in your day-to-day, ranging from financial modeling to cleaning a dataset and presenting some visual insights. Related to this video, we also have an in-depth 3-statement model which goes over Apple's real financial statements. So if you're interested in checking it out, we'll leave the link in the description below. Alright, so we finished the income statement, but we do have some line items that are still not done, like the depreciation over here. So for that, let's go to the very last tab, which is the one on the fixed assets. So go to Control Page Down, all the way to the last one. From here, this is going to help us fill in the depreciation and amortization. So firstly, let's clean up the formatting again over here a bit. So select all of this area here. So Control Shift right arrow. From there, go to Control 1. Let's go under Custom again. And we want to change this to YYYY. And then we'll put this reverse dash sign and press the E. Press Enter, and that's going to change it for us. We also want to change a bit over here, put the indents and so on, which I'm going to fast forward so you don't have to see it all. So to explain this table a bit better, over here we've got the different types of investments that we expect to make. So we're hoping to buy a lemon crusher, an ice machine, and a refrigerator as well. That's going to be in 2022. And over here, the asset life, we've consulted with the different vendors, and this is what they say we should estimate as the life of the asset. So basically how long till we have to throw it away because it's no longer useful to us. So we've got the lemon crusher at 3 years and then 7 years for the other two. So we can go ahead and put the totals over here. So press the Alt and arrow, the equal sign, press Enter, Control C, and just drag that across, Control V. Over here, you'll notice that we actually buy another lemon crusher in 2025, and that's because it's only got a 3-year life, and so we're probably going to dispose of it by the end of this one, so we buy a new one. So now that we know what we're buying, we can go ahead and create a depreciation schedule, which is going to be just down below. And if you don't know what depreciation is, it's just a way to allocate the cost of an asset over its useful life. So for example, if you bought, say, a new truck for the lemonade stand that cost 50,000, then all of a sudden in that 1 year you would have a drop in 50,000 and you would probably have a huge loss that year. But the next year things would be pretty good. And so that doesn't make much sense. And instead what you do is try to allocate it over its life. Let's say the truck has a 10-year lifespan. And so for that, you're going to incur the costs on a relative basis. So everything at 5,000 per year, as opposed to just having the 50,000, which looks like something terrible happened 1 year and then things are back to normal, which is just a bit odd. If we look into the depreciation table over here, we can see that we have already some existing equipment, say from previous years, for example. And on top of that, we have what we're going to buy. So for the lemon crusher, we need to allocate it over its 3-year life in this case. So we'll go to equals, then we'll select the 5,000 here, which is the cost. Press the F4 key such that it's only locking the D sign, and then divide that by the number of years. Same thing, we want to press the F4, press it again, and one last time, press Enter. From there, if we've locked the things correctly, we should be able to just drag it down. So Control C, drag it down here, and then Control V. Let's just make sure by selecting this last one, pressing the F2 key, like so. And you can see that it's moved down accordingly to the place that it should. From there, we'll select all of them. So firstly, let's do the first one. So Control C, and then drag it across to Control V. And you'll notice that because we buy a new one here, and it's only got a lifespan of 3 years, we actually need to renew it here. So we'll go to equals, and then select this one again, press the F4 key again, and one last time, and then divide that by 3. Select it here, and then press the F4 key again, like so. And then for these ones, we can just drag them across. So Control C and just press Control V. And we actually need to do this all the way till the end. So Control C, Control V here. And lastly, we need to sum everything. So for that, we'll just go to Alt equals, press Enter, and just drag that across, press Control V. So now that we have the total depreciation and amortization, we can already link that back to the income statement. So let's go ahead to the income statement, Control Page up all the way here. And then for the first one, go to equals, control page down to the last one, and we'll select the 2022 one, press enter. From there, we should be able to drag it along. But first, we actually need to make it a negative here. So press the F2 key, and let's put a minus sign right here up front. Press enter, and then control C, just drag it across, control V. And in this case, you might notice that we have depreciation and amortization. If you don't know the difference, basically depreciation has to do with tangible assets, so things that you can actually touch, like say machinery, a building, other things like that. On the other hand, for amortization, it has to do with the intangibles, so things that you can't touch. Examples of that are usually like patents, copyrights, and other things like that. And the last line item that we have to fill here in the income statement is the interest expense. And for that, we're actually gonna start getting into the balance sheet and then be able to backtrack from there. So go to control page down. So first things first, let's work on the formatting here. So for that, you see that we have a historical number. So that's going to be an actual as opposed to an estimate like all of these here. So to change that, we'll go to control 1 and then we'll go to custom here. And now we don't actually want just the years, but we also want the month because it's going to be the balance sheet and it's a snapshot of a specific time period. So for that, we'll go something like MMM, press the dash key and then YY, which is gonna be for the years. And then we'll put this sign over here and then put an A for the actual, press enter. Now we've got the December 2021 actual. And for all of these, we want to change them to estimates. Same kind of concept, control 1 key, we'll go to custom and we'll change those. So 3Ms, press the dash and then we'll go to year, put the sign here and then we'll go for E for estimate. Nice, now we have to do all of the other formatting stuff, which we've done before, so I'm just going to fast forward this as well. Alright, so now we have the formatting looking the way that we like it. Let's go ahead and start looking at the historical figures so we can see what's going on. So we had cash of 5,000. Next to that we have the accounts receivable of 150. If you don't know what accounts receivable is, this is typically when they've paid for something, but you still didn't get the cash. For example, a typical example here could be with the credit card companies, where there might be a bit of a delay between when the customer actually pays and when you get the money in. Under the fixed assets, we've got the 10,000 over here, which as we mentioned is for the existing equipment. If we go control page down to the fixed assets here, you'll find that we've got all of this existing equipment that we mentioned earlier, which is being depreciated. So control page up again to get over here. This is the accumulated depreciation of it. So we can start putting the totals in for these ones. So we'll go to Alt equals here for the first ones, and then Alt equals again for these, press enter. Total non-current assets is just the net fixed assets, press enter. And then for the total assets is the sum of the current plus the non-current. So equals this one, the current assets plus the non-current assets, press enter. Then on the liabilities side, we've got the accounts payable. So for example, maybe we bought some lemons from a vendor, but we still didn't pay them in full. That's why we might have something like that. Next to that, we have deferred revenue. So this is when we've already received the revenue from a customer, but we still haven't delivered the product. For example, maybe hey, they've already booked in advance for a lemonade and they paid us money for it already. That could be the case for deferred revenue. So we'll go Alt equals here and press enter. For the other liabilities, we have some debt over here. That's mainly because hey, we're a startup and so we needed to borrow some money from the bank to get started. So we'll go equals and then just link it from here. And for the total liabilities, it's the sum of the current and the non-current. So this one plus this one over here, press enter. Next up, under equity, we have the common stock, which is 300. This can get a bit complicated, but for now, just see it as your assets minus your liabilities. So whatever's left in your company after you sell everything and you pay off for all your debts. And then lastly, we've got the retained earnings. So that's whatever you have at the end of the year at your company. So let's get the sum of that too. So Alt equals, press enter. And for total liabilities plus equity, same thing. So equals total equity plus the total liabilities and press enter. And the balance check here is basically going to check if the assets equal the liabilities plus the shareholders' equity. If that's not the case, then we probably made a mistake somewhere. So this is some sort of a health check, if you will. You can press the F2 key and that's how you see what there is currently there. Moving on from that, and we've got all of the different assumptions over here down below here. And so firstly, we've got the net revenue assumption as well as the COGS assumption, which are going to help us calculate all of this stuff here. For the accounts receivable, let's make this one dynamic again. So we'll go to equals and just select the accounts receivable here and put the ampersand, quotations, and then we say as a space as a percentage of rev, then close the quotations and then press enter. And we need to do the same thing here with the accounts payable. So we'll go equals and we'll select the accounts payable here, ampersand, and then we'll go quotations quotations as, put the space here, as a percent of revenue, and then we'll close the quotations here, press enter. And lastly, for the deferred revenue, this is actually the same thing, so we'll just copy this one and paste it. That should work for us. One thing though, for the accounts payable, this is usually linked to the cost of goods sold as opposed to the revenue, so we'll have to change that. So go inside it by pressing the F2 key, and we'll just change this to COGS. There we go. Once this is set up here, let's go ahead and add the net revenue and the COGS, which we can find from the income statement. So we'll go equals, control page up. The net revenue is going to be this one here. Press enter, and then for the COGS, we'll go equals, page up again. And that's going to be the total COGS here. You'll notice that the formatting is all messed up, so we'll go to Alt-H FP and then just drag it down here. Once we have that ready, Control-Shift down, and then Control-C, Control-C, and just drag it across, Control-V. One thing though, for the COGS here, we don't really want it as a negative number, just because we're going to be doing percentages from there after. So we'll go to F2 key and just put a negative sign in front so it makes it positive. Press enter and then just drag it along, Control-C, Control-V here. So let's go ahead and do all of the different percentages that we'll need. So for the accounts receivable first, we'll go equals, control up, all the way to the accounts receivable, and then we'll divide that one by the net revenue. Same thing here, so accounts payable equals, we'll go select the accounts payable, here it is, and then we'll divide that by the COGS in this case. And then for the last one, the deferred revenue equals, here's the deferred revenue, and we'll divide it by the net revenue here, press enter. And once we have these historical figures, we can actually go ahead and forecast them for the future. And we're just going to link them to whatever they were in the past for simplicity. So we'll go equals, then just select this one, then just press Control-C, shift down arrow, then shift to the right and press Control-V. And based on these percentages over here, you'll notice that generally the accounts receivable is lower than the accounts payable. Now, is that a good thing? Yes, because that basically means that you're taking a lot longer for you to pay whatever you need to pay, but customers are paying you fairly quickly. And so you're actually going to have a good cash flow in that sense. And now that we have all of these assumptions, we can go ahead and put them in to the balance sheet here. So for the accounts receivable, we'll just go equals. We want to select the 1% and multiply it by the net revenue. Press enter. Same thing goes with the accounts payable. So equals, control down here. Accounts payable is this one, and multiply that by the COGS instead. Press enter, and then same thing for the last one, the deferred revenue, control down arrow, select this, multiply by the net revenue, and press enter. Now we can already get the totals for these, so let's just set up the formula. You see that the formula is already in here, so we'll just Control-C and then Control-V to paste it along. Same thing over here, so Control-C and then Control-V to paste it along, and we can paste all these figures as well. So just Control-V. You'll notice that all of these are sort of unformatted. We'll press the Control-1 key, and from there we want to go under the Numbers tab and change the decimal places to 0, say, press enter. Now that's looking a lot cleaner. These over here, let's also drag these across, so Control-V. Now let's look into the non-current assets that we have over here. So for the fixed assets, this is basically going to be whatever fixed assets that we had in the previous year and add anything new to that. So for that, we'll go equals, select this one here, and then plus, control page down all the way to the fixed asset side here, and we want to select the CapEx over here, which is our capital expenditures, so whatever we've added into the balance sheet in this case. So press enter, and we can also move that across, and then Control-V. For the accumulated depreciation, the concept is pretty much the same, except that it's going to be negative, right? So we'll go equals, select whatever we had previously that's been accumulated, and another minus sign, control page down again, and it's going to be the total D&A here. Press enter. Then we can drag that across as well, Control-V. Then the net fixed assets is going to be just the sum of those, so Control-C, we'll just drag it across because we already have the formula. And same thing over here, same thing with these two, so Control-C and then Control-V because we just need to drag them across. And total non-current assets here should have a bold, so we'll press the Shift space key to select the row and then Control-B. There we go. Now moving on to the debt area that we have over here, and for this we actually have different assumptions, so let's look at them down below here. Here we've got all of the different information that we're going to need. So right now you can see that we're going to need to borrow some money in this particular year, but anything before that we're just going to be repaying whatever we had. So remember we took out a loan over here that you can find of say 10,000, and so that's basically paying that down. And as you can see, once we incur a new loan, then that obviously the debt repayment is going to be higher. Usually the debt is broken down into short-term and long-term debt, but for this case, just to simplify it, we just put it all into one. So going back to the balance sheet item, that's the debt here. What we want to do is first go to equals. We're going to have the previous year's debt plus any new debt that we've incurred, which is going to be the net borrowing here, minus any debt repayment, so whatever we've paid back of it. So we'll select this one and then press enter. Then we can just drag it across, so Control C, Control V here. And for these, we can just select these formulas, Control C, and then Control V. Then for the equity side, we've got the common stock, which we'll just assume is the same. So we'll go equals and select this one, press enter. And then we've also got the retained earnings. So for the retained earnings, it's usually the previous year's balance plus whatever net income that you made this current year, say. So go to page up, under the income statement, you'll find the net income over here at the bottom, and then press enter. Sometimes you will have dividends, which are going to be a negative, right? Because the money is going to be going out to, say, the investors, for example. But in our case, we don't have that, just for simplicity. Then for the total equity, it's just going to be the same formula. So Control C and then Control V, drag that across. Same thing here, Control C and Control V. Now moving on to the last assumption that we have here under the balance sheet, which is the interest payment. This is going to be useful for us under the income statement to fill in this last item, which is the interest expense here. So go to Control page down again. And what we're going to do is go to equals. It's just going to be the interest rate times whatever debt amount that we have, which is this one over here. Press enter, and then we'll just drag that across. Control V, then go to Control page up. And for the interest expense, we need it to be negative. So we'll go equals minus Control page down, and we'll select it from down here as the interest payment, press enter, Control C, drag it across, Control V. We finally have a complete income statement, but now if you go to Control page down and check out the balance sheet, you'll notice that it's actually not matching for all of these years over here, which is obviously not a good sign. It should always match, or else we have a mistake. But go to escape here, and then you'll notice that we actually don't have the cash over here. So that's probably why it's currently not matching. To find out the cash, we're actually going to create the cash flow statement, which you'll find just by going to Control page down again. So first things first, let's format this one quickly, and I'm just going to fast forward this so you don't have to see it again. Alright, so now that we have it formatted the way we like it, firstly, let's go ahead and get the net income. So for this, we just got to go to the income statement under the last line. So equals, Control page down, all the way to the income statement, then Control down arrow to get to the bottom, and we'll just select the net income here. And for the operating activities, firstly, we've got the depreciation. So for this one, we'll go to equals, under fixed assets in this case, go over here, and that's a total DNA here. Press enter. And you might wonder why depreciation is actually being added back here. That's because there's not really a real cash outflow, in the sense that whatever, say, transaction you had with the vendor, let's say for a truck, you already paid for on that day. And so that's why there's not really a cash outflow now. Next up, we've got the change in accounts receivable. So for that, it goes to equals. We'll go to the balance sheet. This is going to be the current year's accounts receivable minus the last year's. So go to Control page down, page up here, and we'll select the current year's minus the previous year's. Press enter. And now we actually have to make this negative. So for that, we'll just go in F2 and go to put a minus sign first, and then put it in brackets and get to the very end and close the brackets here, press enter. And you might wonder why an increase in accounts receivable is actually something that should be negative. That's because when you think about it in terms of cash, the cash inflows are actually going down, in that more and more people owe you money, but they still haven't paid you. That's essentially what accounts receivables are. And so for that, it's actually a cash outflow for us, so it's a negative. And for the change in accounts payable, it's pretty much the same logic, except that this time around it's flipped. So we'll go equals, Control page up, get the accounts payable from here, minus the one just prior, because we want the change, press enter, and that should give you 20. And then we can just drag this down, Control C and Control V. And to explain this for the accounts payable side, this basically means that it's taking us longer and longer to pay the cash, say, to a vendor, for instance. And so we're keeping all that cash. That's why it's a positive thing for us. That's why we have a cash inflow. With all this, we can sum the operating cash flow. So Alt equals, press enter. Then we've got the investing activities. So these are usually things like property, plant and equipment, that kind of stuff that you might invest in. In our case, we've got the CapEx. So for that, we'll go to Control page down to the fixed assets here. And we want to select the total CapEx over here. So go to Control page up, go to equals. And we want it to be a negative, essentially, because we're spending money to acquire, say, a specific machinery. And so that's a negative. It's a cash outflow for us. So minus, Control page down. and we'll go to the total CapEx here, press enter. And then for the investing cash flow, it's just going to be a link to that. So this is it. And then for the financing activities, we've got the debt repayments and the borrowings. Both of these line items we can actually find from the balance sheet. So for the first one, for debt repayment, we'll go equals, control page up, and we should be able to find it over here. So here it is. And in this case, it's actually going to be a negative. And when you think about it, we're essentially using our cash to pay down debt. And so it's a cash outflow for us. So we'll go to F2 key and put the negative sign in front, press enter. And for the borrowings, it's actually the opposite. When we borrow money, we essentially get cash. And so that's good for us. It's a cash inflow. So we'll go equals, control page up, and the net borrowings should be right here. Press enter. And now for the financing cash flow, it's just the sum of these two. So sum, and select the two, press enter. And the net cash flow is going to be the sum of all of them. So we'll go equals the net income plus the operating cash flow plus the investing cash flow plus the financing cash flow, press enter. Once we have that, we want to select all of them and then press Ctrl C and just drag across by pressing the shift and right arrow, Ctrl V. Once we have the net cash flow, we can actually go ahead and fill in the balance sheet where we're missing the cash. If you remember over here, we're missing it. And so that's why it's currently giving us a negative balance on the check here. So let's go ahead and link it. So we'll go to equals. We actually need to do the previous years. So this cash over here and add whatever change there was to the cash flow, which we figured out in the statement of cash flows here. And then press enter. And from there, we'll select all of them. So Control C and then shift right arrow, Control V. Now, if we did this correctly, once we check the balance check here, it should be 0. That would mean that we've done everything right. So we'll go Control down arrow all the way here, and you can see that they're all 0, sorry. So that basically means that we did everything correctly. So creating a dynamic 3-statement model like the one we created here is going to be the foundation for any sort of valuation that you might want to do on top of that. For example, it could be a discounted cash flow, a leverage buyout, a M&A model, other things like that. So if you want to learn more about valuation, you can check out this video over here. Or if you're interested in knowing how to make this a bit more visually pleasing with some cool Excel charts, check out this other video over here. That's all for this one. Hit that like, hit that subscribe, and comment down below. It helps out the algorithm. That's all for this one, and I'll catch you in the next one.